The S&P decline is likely to continue until about October 10th. This is what swing traders and day traders need to know. Today is August 4th, and we're going to follow up on what we've been saying in the past few videos, that there were two possible paths that we were considering, and one of them involved the market breaking down into the 5350 area, which it did do on Friday. We also mentioned that there was a 1998 pattern that we were looking for repeating, and it was coming in. It possibly could have started already. And it turns out we believe that to be true, that the 1998 market and also a very similar analog, the 1990 market, both of them had highs in July 15th through 20 area, as we did this year, having a high on July 17th. And both of them have a very similar stair step down, and they're fairly significant declines. The 1998 pattern was 16%, and I think there's a good chance we can rely upon something about that size happening this iteration. Now, several things. First of all, the 49-week cycle, which we've been describing for several videos now, is still in there. It's still repeating. And two cycles ago, almost 2 years ago, the market has the closest pattern to what's actually happening now, where the Wednesday rally, the huge rally on the Fed announcement on Wednesday last week, was mirrored by that pattern, and the collapse for the 2 days after that also happened in that pattern. And that pattern says we go down into the middle of September and potentially having another low in October. This matches very closely the larger picture patterns, the larger patterns that happened in 1998 and the pattern that happened in 1990. Those are, I believe, reasonable roadmaps to what's going to happen here in 2024. So let's look more closely at that. First of all, in 1998, the market had one initial decline phase, which was fairly sharp, as we have had, that ended on August 5th, this week. And the 1990 pattern had a very similar situation where it had one very sharp decline phase ending on August 6th. And then both of those markets have a sideways period that starts this week, that starts between the Monday and Tuesday this week, going forward until somewhere between the 9th and the 15th of August, where there's some sort of an upward corrective, probably a counter trend up move. And in the 1990 market, it was almost negligible. In the 1998 market, it was very noisy and actually kind of a little bit significant enough so that people would not know anymore if the market's going to go further down. Right after that, however, it has another leg down, a very big leg down that starts in the middle of August and works its way down into early September. The 1990 market has a very similar pattern, but the rally this week is even smaller. It has a little rally up until the 15th, starting on the 5th or 6th. And then it has another really sharp breakdown, and then another one later in the month. So we have basically a roadmap which we think the market's going to do this time, and it's following the 26-year cycle, as we had said. We also found that in our present market, from the low in March of 2020 to the high in July of 2024 was 226 weeks. And 226 weeks is 1/6 of the 26-year cycle. And if you look at each of these, and it's approximately 4 1/3 years. So the market went up for 4 1/3 years from the 2020 low, the pandemic low, until this July. And if you look at the iterations of that in the past, if you go back to the time before that was in 2015, the time before that, each of them has a 9 to 12 week decline. So there's an actual structure here that there's a 9 to 12 week breakdown in the market at this time. How deep it will be, we don't know for sure. But because it broke the uptrend line on Friday, which was a signature thing, it hasn't happened, obviously, since the up move started in October. The significance of that means the market's probably going to fall pretty hard. Okay, and if it does so, the end point, both in 1990 and in 1998, and according to the 49-week cycle from last year and the one from 2 years ago, is either middle September, around September 10th or 11th, or October 10th, and more likely the October 10th if the larger patterns are going to be repeating. So that's all. This is swing trading information. This is for people who are swing traders. And what's also important to realize is that these dates may be off by a day or so. So you can't necessarily buy and sell of every single date that's repeating in the past. However, the trend and the tendencies and the tone and the significance of this, we're in a few month decline that just started. That's the important point. That's where you can make your money. All right, now also interestingly enough, for the day traders, there's a little clip from our clinic that I did yesterday on Saturday morning with our students that we do every week as part of the class, part of the course, the Trade Forecast Mastery class. This is a little clip showing something useful for the day traders. We found a 7 trading day cycle on a 5-minute bar chart that's been repeating for over 3 or 4 days in a row, including Thursday and Friday. It called everything. It was really beautiful. So here's a little clip to show you what those clinics might be like. But I want to show you something that was really remarkable on the 5-minute chart. Remember, one of the things we look at is multiples of 275 bars on the 5-minute chart. And, you look at one iteration, 2 iterations. John Behrens is finding them regularly on a 1-minute chart. Well, if you go back 7 trading days ago, a little, it's 7 275-minute bars, the thing's repeating forever. I mean, it's beautiful. Hold on. Where are you? Here it is. So all I did is overlay 7 days ago, 7 times 275 bars. Look at that. This is the way. Look at the way this thing fell. You notice even the 2 wave. You see, we have a 1 that ended here. There's your 1 wave. There's the 4 of the 1 wave on the 5-minute chart. That's the 1 wave of this thing. This is the 2 wave, which was choppy nothing. It was choppy nothing 7 days ago. Then it starts to fall. Then we have this low, and this is Monday. 8:05 at 6 in the morning. It starts to rally until roughly 9:35. This is Monday. Tuesday. That's the next few days. If the 7 trading day thing continues. Look how well that's been working. We're talking about a number of days here. This has been, each of these is a day. This is working this day, it's working that day. It's working that day, including the exact high. It's working here. And if it continues to work, it gives you kind of an idea what we could be seeing Monday, Tuesday, even Wednesday. So here's Monday at midnight, and this is August 6th at midnight, and this is August 7th at midnight, and August 7th, we don't have the day session here. There's only so many bars you can project. It only do 999 bars. But this gives you an idea of what's coming next. And the fact that you could find this is what I was trying to say. The fact that you could find one that's that accurate is not unusual. You just have to look.
It's beautiful. I mean, to the minute you could predict the market with this.
So what do you do, right?
Yeah. How do we narrow that down, right?
Well, this is where, truthfully, the way you do it is you have to keep looking. What you do is you find candidates that are working and that agree with each other.
So very often, usually yesterday is opposite, not always, but more than likely, one day ago is odd numbers are opposite, even numbers tend to be same. So look at 2, 4, 6, 8, and find sameness overlaid on top of each other and the market. You look for repetition of the same pattern in several locations. The probability of it lasting a long time, if several of them agree, is greater than if you find one that looks really good for a week.
Also, I want to remind everybody this coming Sunday, the August 11th, will be the beginning of our next Trade Forecast Mastery Masterclass. And if you're interested, please let us know, and you can sign up on our website.